we're going to, well, do the chapter 8 handout. So this is the new stuff for tonight. And then we'll have a practice exam on chapter 7 and 8. And that'll be it for the class. And then, so I'll send this chapter 7 and 8 exam out right after class. And it'll be due, well, everything's due Friday by Friday 17th. Not this Friday, but the coming Friday. So next week, no class. However, I will be here for tutoring. So if you have any questions on anything that's not in the recorded meetings, or you still have questions after looking at the recorded meetings, by all means, you can tune in. You can tune in anyways, but no new material. And everything is due. That's nice, spell everything. Right, next Friday. So if you have stuff to turn in, and you know, whatever it is, everything is due by Friday, 12/17. If it does come down to, you know, trying to make a decision between something, make sure you get all the exams in. The exams are 80% of the grade. The other things are 20%. And each of those handouts, if you think about it, every chapter we have at least 2 other ones. So, you know, the exams are probably worth 8 times what any of the other handouts are. So this is a numbers game thing. Make sure you get all the exams in. That's probably the most important thing. But yeah, so, but I'll take anything up until Friday, 12/17. And next class, again, we won't cover any new material. If you tune in, we'll do whatever you want, but I won't have anything of my own. Okay. Well, let's see here. Oh, you guys can't hear me?
Yes, we can hear.
Well, let me check my mic thing here. Is this better?
Yes, we can, I can hear you.
Oh, okay. All right. Yeah, I don't want to go any further because it's.
That's fine.
Because my smooth voice will put people to sleep. All right. Yeah. So I think. Oh, okay. So, that's what we're going to do, the chapter 8. So you should have it. If you don't have it, it's in Blackboard under the handouts. And so let's go ahead and talk about it. It has to do with accounts receivable. And as you probably figured out, you know, about accounts receivable is there is a problem with them, and that is sometimes you may not collect them. Up until this point, we've always assumed that you would collect all the accounts receivable, but common sense would dictate that that's not always the case. There are reasons why people can't pay. They go bankrupt, they lose their job, they die, they leave the country, whatever it is. There's all kinds of reasons why you're going to have some that aren't able to pay. Now, there's a problem though. And here's the problem. When you record the sale in one year, you may not know that the account is not going to be collected until the following year. That's a problem. Because we have this matching rule that revenues, should be matched with the expenses, for example, for whatever year it is. Hey, that's supposed to be yellow. I only got 2 colors, and the coloring scheme is already breaking down. So, I mean, it really is just the idea that, okay, all the revenues from 2021 should be matched up with the expenses from 2021. But there's a problem. The problem is you may very well not know that one of the sales in 2021 is not collectible until the following year. It really doesn't belong in the following year. The sale wasn't made in the following year. It belongs in this year, in 2021. So that's the problem, is that there is this timing thing that you won't know that it's not, who's not going to be able to pay until the next year. So what they do is they, okay, well, we don't know exactly who it is, but the people that aren't going to be able to pay, but we do probably have an idea of how much that we aren't going to collect. Companies that have been around, especially if they've been around for a few years, they'll say, okay, we don't collect about 2% or 3% or whatever it is. So you can make an estimate of what you're not going to collect. And that's all we're doing here, is saying, okay, we really, it's not going to be 100% accurate, but we're going to make an estimate of what we think is going to be not collectible. And we're going to expense that in the current year. 2021, we're going to make an estimate of what's we're not going to collect. And we're going to put that into the current year. All right. Let me show you. So, and coming, I goofed up my spacing. Hold on. So for instance, you might have a uncollectible expense that you record an estimated amount that you put on your income statement. But also, if you look down here, another thing is, if we have these accounts receivable on the books for the full amount, we're really not being honest about it because we're probably not going to collect all 20,000. The true amount that they're probably going to collect is something less than that. In this case, 19,000. So again, we don't want to overstate our accounts receivable. If we put 20,000 down, people are going to expect that we collect 20,000, and we're not going to. We know that just from the past, we're going to collect 19,000, probably something around there of those. So we also don't want to overstate what we have on our books for accounts receivable. So that's why we're doing this whole estimating thing. Okay. There are two different methods. The method we're going to use is the net sales method. There's another method we're not going to use. And only if it's unanimous that people want me to go over it, I will. Okay. We'll go to so this is the only one we're going to cover, is the percentage of sales method. And companies can use either one, kind of like LIFO, FIFO. And to make it even more confusing, some company, you can actually use both of these methods. And a lot of companies do use both of them, but we're going to use just some percentage of sales. They're both kind of the same thing here. Same idea. Okay, let's go to problem. Oh, my problem 2 got goofed up here. Okay. So problem 2, we have our accounts receivable. We have this allowance account, and you'll notice that they're different. That one's a debit, one's a credit. All right, so this is kind of going to knock down that account, but we have these sales. And so what we're going to do is estimate using these sales. We're going to say, okay, how much of these sales are not going to be collected? We know we're not going to collect all of them, but how much? All right, so let's see here. For our sales, we have 300,000. And we're saying that 2% or 0.02 it is not going to be collectible. I'm just use 0.02 just because it's easier. easier for me anyways. You have a good calculator, you can use that. So, and again, this might be what, in the past, how much of these sales have not been collectible. What's it? 6,000? 6,000? So 300. Calculator turned off. Yeah, that can't be right. All right, 300,000. Oh, got my calculator cam. Sadly, this is the last day you'll see the calculator, unless we use it.
It's 6,000.
6,000.
Yeah.
So we're going to say that 6,000 of these are not going to be collectible. All right, journal entry. This is 12/31. We're going to have two accounts. Uncollectible accounts, expense, not spelled like that, expense, and that is going to be for the 6,000, and it's a debit because expenses are always debits. Let me see, expense. And the next one is going to be a allowance or doubtful accounts. It's kind of a funny name, but. And this is a Contra account to accounts receivable. So now I'm going to stop right here. Notice what we did. We have expensed the accounts we think are not going to be collectible already, but we don't know who it is. That's where this account allowance for doubtful accounts comes in, is that we don't know who is going to go bad. And if we knew, we probably wouldn't have sold them in the first place. But the allowance for doubtful accounts is there because we do not know who is going to go bad yet. We know that a few of them are going to be uncollectible. We're estimating 6,000. So what we've actually done is say, okay, in this year we're going to expense the bad. They don't call it bad debt. Well, they do call it bad in some places. The uncollectible accounts. We're going to expense them in the current year, even though we don't know who they are. Now, later on, we'll probably figure out who they are, but right now we don't know. So we're going to make an estimate and tell people, look, 6,000 of this probably isn't going to be collected. If what we did in the past, holds true, that you're not going to collect all these. So we're going to expense it right now. So we've expensed these things ahead of time. We've expensed them in the current year. It has to be an estimate. We don't have a crystal ball. We can't look into the future, but that's what we're doing though, is we're expensing it in the current year. Okay. So the accounts receivable, let's see here. Okay, those are already in there. All right, so coming down here, we have this accounts receivable. And we just added another 6,000 to the allowance for doubtful accounts. So the total in there is what, 7,000? Okay, so here's what we're going to look at on the balance sheet. Underneath our assets, we're going to have a bunch more assets here, but just for the accounts receivable, we have 78,000.
Mhm.
Allowance for doubtful accounts, though, we're saying, okay, we're not going to collect all of these, so we're going to subtract out 7,000. And again, we don't know who yet. Oh, terrible. Okay, again, we don't know who they are. We don't know who these people are that we're not going to be able to collect from yet. So the accounts receivable, we're going to tell people, look, if this is what you should expect that we're going to get out of it. You know, this is the true amount that you can expect for us to collect, 71,000. I know we have 78,000 in accounts receivable, but you know, based on the past, we're probably not going to collect that. And again, that allowance account is simply set up because we don't know who it is. We've already expensed them. You know, we've already expensed for people that are, you know, that are not going to be able to pay. And if you think about it, like, you know, think about this, everything in that allowance account has already been expensed. That's how it gets into the allowance account, as an expense. So everything, this 7,000 from, you know, previous and from this time, those have already been expensed. I know it's kind of a strange way to think about it, but you know, you're expensing them in the year, you're trying to match it up to the year that you're actually making the sale in, having the revenues in. Okay, question on that thing? Let's go to the next one. The next one's got a little bit of a twist to it, not much though. And that's what we have two of these. We have sales returns, sales and sales returns and allowances. We actually did this before in chapter 6, maybe. So we have our, I'm going to make left justify these. So we have our sales. And then we're going to subtract out our sales returns and allowances. Okay. Yay, there we go. Okay, so we have what, 430,000? But we are going to subtract out, they brought back 10,000 and stuff. So those really aren't sales. And if they brought it back, they don't owe us that anymore. So our net sales will be 420.
Yeah.
So this is what you're going to use for your for this thing. Use 3% of those. So I'll be quiet and see if you guys can figure it out. Okay, I think that we should have gotten was 12,600.
Mhm.
Saying, okay, we're not going to collect all these sales. 12,600 we're not going to, so our allowance for doubtful account goes up to 14,600.
174, yeah.
This is that number. And you can tell the people reading this thing, say, look, this is net accounts receivable. This is what we're really going to collect. Yeah. Okay. Okay. There's on that.
So,
Okay. Well, next thing we're going to do is go to writing off the accounts receivable. So what happens in, say, the following period when you find out who it is? Now, remember, we've already expensed it. So there isn't going to be any new expensing of these, oh, we found a bad debt, we're going to expense it. It's already been expensed. It's been expensed through the allowance account. And that allowance account is what we're going to use when we find who it is. We know that some of them aren't going to be collected, just, statistically, you know that. But now you're figuring out who exactly it is. It isn't that it's a surprise, you expected it. And so this is going to be, and again, everything in that allowance account's already been expensed. So there's no more expenses coming. In fact, the write-off occurs entirely in the balance sheet. And I'll show you what I mean by that in a second. Okay. Oops. So number 4. Company noticed the customer had declared bankruptcy and not be able to pay off their accounts receivable. And they had a balance of $300. Okay. So now you can't see my screen because I'm an idiot and I didn't put my screen up. I'm sorry. Let's try this again. So number 4. The barber company was notified that a customer had declared bankruptcy and not be able to. The related accounts receivable balance had a balance of 300. All right, so now we find out who it is. We didn't know that before. Now we do. So So what we're going to do is, how are we going to write this off? Now, we already have these accounts receivable set up. Excuse me, the allowance for a doubtful account set up to take care of these accounts receivable that are not going to be collected. This is already set up. And this is already expensed. That whole 500 has already been expensed. So what we're going to do is, our accounts receivable has a debit balance of $1. We're going to credit it, take the accounts receivable off the books. And we're also going to take it out of the allowance account, saying, okay, we set this allowance account up for accounts we weren't going to be able to collect, and oh, we found one. And I shouldn't have done that. I just realized there's something down below. Oh boy. Well, we can still do it. Okay, what amount was in the accounts receivable before the write-off? Okay, before the write-off, we had accounts receivable of 150. I should have did this first. In fact, I'm going to take these out for a second. I'll put them back in, don't worry. So before the write-off, we had 150,000 and we had allowance was 500. And so the net accounts receivable was 150,000 minus 500 is 149,500. So that was before the write-off. Okay, well, let's do the write-off like I did before ahead of time. And the journal entry would be here. What date was this? March 2nd. Okay, so March 2nd. We're going to have our allowance for doubtful accounts. And we're going to have our accounts receivable. I'm gonna get these closer here in a second. Get this out of the way. Pepsi was an asset going down. Okay. Now these two are both on the balance sheet. So this entire thing just happened on the balance, and even more specific, it happened in the asset account. Everything is here is in the asset account. Just the whole thing happened in the asset account. This write-off. There's no expense or anything here because it's already been expensed. Okay, well, after this write-off, let's see how much we still have in there. 50,000 minus 300 is 149,700. Check that. This one I can do, it's 200. So we write off the account. Our accounts receivable goes down to 149,700. Our allowance account goes down to 200. There's still more that we think we're probably not going to collect. So we're going to do the asset section for this, for the accounts receivable, after the write-off, and it might be a little bit surprising. So after the write-off, we had 149,700. Our allowance for doubtful accounts is down to 200. you'll notice the value of our net accounts receivable has not changed. Well, why? Well, we already knew that some of these were going to go bad. We already taken them out. You know, that 300 is included in this 500 here. So we take it out, it doesn't change anything. We say, okay, we already knew that was going to go bad. So when we write it out, nothing's going to happen. So actually your total assets, when you write off an account, this is going to sound strange. You write off an account, your total assets do not change. Because you've already expected that some of them won't, and you set this up and, you know, to take care of that. Any questions on that? Lots of questions on that? Okay, well, so now you kind of know how this comes off. Let's go ahead and get, let's do this last one here. I think we can do, we just got what, 20 minutes before we take a break. So we can get this one in easy. So they're gonna write off $200 of the accounts receivable. I'll tell you what, I'll do this down here for the current balances. So this is where they're currently at. They have 210,000 accounts receivable, allowance for account is 1,000. So this is where they're at. And now they're going to write off trying to think of a better way to lay this thing out. This is a little bit clunky. All right, so customer bankruptcy. Excuse me. That was a yawn of excitement because we raised the account. All right, so they wrote off a $200 account. Okay, so we take this off. Okay, we're not going to collect that. We have this allowance account that's set up for just this case. No, now we're figuring out who is going to be written off. Today, May 12th. Oh, I gave a year there too. I didn't realize that. So the allowance account is going to get the debit. We knew this was going to happen. Oops. We knew it was going to happen. We just didn't know who it was. And accounts receivable, we have to take those off the books because we're not going to receive those. Okay, so how much do we still have in these accounts? 210 minus 200 is 29800. So those are the ending balances in the accounts. So we come down here. The actual balance in that, or the net accounts receivable will not change. Because we've already set up this 1,000 up here for ones that we were gonna go bad, and we found 200 of them, so we wrote them off, took it out of the accounts receivable, took it out of this kind of bucket we've had set aside for just such an emergency when things can't be collected. And so it's already been taken out, so it does not change the accounts receivable. Now we just know who it is. And there's still 800 that's unknown. You know, right? I mean, so this is still, it's not still. Yeah, we still don't know who this is, which other accounts are going to go on, but we're estimating that 800 of these will still be not collected. Weird, huh? Okay, so here's what I'm going to do. First, any questions with this? Come up here.
Uh,
Oh wait, I'm missing a letter here. That's kind of unusual. And again, the reason why we estimate it, because we don't know who's going to go bad. All right, well, here's what I'm going to do. So that's it for the chapter 8 handout. Save it. I'll go back down to this one so take a look at it again. But and by the way, this is more informational down here. This is not. I'm not going to test you on that. Doing the balances and all that. So what I'm going to do though is I'm going to send out the part 1 of the practice test. I think there's 6 questions. And I think that we'll go ahead and do those now, and then you can take a break. And so we'll come back a little bit later. They give people time. If you want to take a break now or later, whatever, and do the multiple choice questions though at some point in there. So let me. Send these out. You guys should get them momentarily. I think they may already be in class handouts. Yeah. Okay. Go back to this. And I also will send out the poll here. Pull it up. Oh, wait, I'm on the wrong thing. Okay, so I'm going to send out the poll and So you should get the part one. Should get you on your email account, and it's also available on Blackboard. Again, there's only 6 of the questions. These are tough ones, though. It's tough because it's stuff you just we haven't had time to let it sink in.
I cannot screw this thing.
Six.
Okay, there we go. Thank you. Can you please scroll down?
Nothing else.
Does it six? Oh, okay.
Yeah, there's only 6.
But the pool shows 10.
I'll say, let's say be back at Is there anyone still working on this? You're still working on it? If you are, say I am, or else maybe put it in the chat.
It was just a six.
I'm trying to submit it.
Me too.
I can't press it.
Did you put something for all of them?
Oh, I gotta put something for all of them. Oh, no.
Yeah. So
Okay.
for 7, 8, 9, and 10, put well, anything.
Okay, now submit.
Okay. Anyone else? Just sharing. I don't want to share that. No, I don't want to share that either. Okay, here we go. Okay, I'll close the bidding then. Okay, show the results. The first one is pretty even. The correct answer for the first one is D, in the same period as the sale. So you try to match those up. I'll give you that one. Second one is B. That is correct. When you write off an account, everything happens in the balance sheet. Actually, even more specific, just in the assets. Number 3, yes, it's an estimate. So C. So far we got number 1 is D as in dog, 2 B as in boy, 3 C as in I don't know, Carla. This Carla could have a K, but we don't have any Ks. All right, number 4 D. Yes, we don't know which specific accounts it is. We can probably estimate what the total is going to be, but we don't know exactly who it is. B is yes. Yes. Very good. Okay. Let's
Number 5 is B, right?
yes, 5 is B. So it's number 1 is D as in dog, 2 B as in boy, 3 is C, 4 is D as in dog, 5 is B as in boy, and 6 is C. You guys are very well. My day class missed 2 of them. Which is a little unusual because they had an extra day on it. So anyway. So I'm going to put that right in here. And I'll save the poll. Okay. Something happened there. Okay. All right. Well, let's go to the last handout of the entire semester. This is the one we were looking for since day one. Okay. Let me try bolding everything and see what happens. A little more visible. All right. So you got to be able to make the journal entry for this.
Is this one in our email? You said we had this from day one.
No, it's only been looking for since day one. It should be in your
Oh.
email.
Oh, okay.
Yeah, this is the, it's also in Blackboard. Let me see if it came through. Just so you know, Blackboard has been really slow today. It should have gone through. It looks like it went through. At 7:15, it looks like. But Blackboard had been like incredibly like you click on something and I'm not kidding, it'd be like 3 minutes. But what's going on here? If you don't have it, if you look in Blackboard under nope, not that. Class handouts should be in there. See it, I think I better look. Yeah, I think it's second from the bottom. Is anyone did not get it yet? All right, go ahead and get started. Excuse me.
Yeah, I have it.
You got it? Okay. All right. So you're welcome. So let's see, sales. Let's see, 2% will be not collected. And sales, we have both of these together. We made 600,000 in sale, but they brought 10,000 of it back. So if you think about it, they don't owe us for 10,000 of it. So returned. So the net sales, the true sales that we made were 590, 590,000. So this is what we're going to take 2% of. It's 11,800.
Yes.
So this is what we're going to write off. I shouldn't, no, that's a bad term. This is what we're going to expense. Uncollectible. Allowance for doubtful accounts. Sometimes called allowance for uncollectible accounts could be a few different. Some kind of allowance account. And so what we're really doing with this is expensing it in the same year we make the sales. So we made these sales in this year.
Mhm.
Well, actually this year, this is about. So we made 590 sales. So we said, okay, some of these are going to be collectible, so we're going to expense them in the same year. Because going into the next year, you know, that those expenses for those bad debts or uncollectible accounts is really not, you know, it doesn't belong in the other year, it belongs in this year. And you gotta tell people, look, don't expect to collect 75,000. It's gonna be something less than that. You don't have to do that like we did before, but you know, it'd be this minus that, whatever that comes out to. You know, 75,000 is more than we're gonna collect. So you want to reduce that so that people don't expect to collect 75,000. Okay. So that's the stuff from I got these reversed. Oh, you know what? I don't, the 7 and 8, I was thinking this was the, this is just number 7 because we went through 6. This is actually chapter 8. This is just number 7. Because we went through 6 with multiple choice questions. Okay. Well, what we're going to do next is a bank reconciliation. This is from last week. So we have our balances. Bank balance is 2,400. And the book balance is some other number, 1950. And so those are obviously 2 different numbers, but we have to go through these and figure out where they go. And we're going to either make a correction to the bank side, the bank doesn't know about them, or to our side, we don't know about them. The stuff we don't know about usually comes off the bank statement. Okay, deposits in transit, where do they go?
It's in transit, so to the books.
Nope.
Bank.
Yep. Okay, something wrong here. Hold on. I'll make those green. So deposits in transit. These are deposits we made usually at the end of the month. And so like if you make a deposit, what is this, January 1st? So, or January 31st. So if on January 31st you make a deposit, it's probably not going to be in the bank on that same day. So we know we made the deposit, the bank just doesn't know. Okay, NSF check. Bank side or book side?
The book.
Book, good. Yeah, in this 1950, we have $240 that we got from a customer. And it turns out that there's not enough money in there.
You're right.
Oh.
Outstanding checks. These are checks that we've written that have not hit the bank yet.
Right.
Bank.
Right.
And by the way, these are usually the only two that you have for the bank. Outstanding checks and oops, doing something wrong here. Outstanding checks and deposits in transit. Those are really the only two you basically see. I know the book will show a bunch of errors and stuff like that, but yeah, those are quite rare. Oops, my check printing fee got out of whack. Okay. Well, having said that, you can probably guess the rest of these go. Bank fees. Probably get that on your bank statement. And you don't write a check for that, they just take it out. Note collection, what do we do with that?
You add it to the.
That's the book.
Good. The bank collected a note
Book
for us.
balance.
On the book. Add it on the book.
Yeah.
I don't know what I was thinking when I did this. Check printing
Check
fee,
printing fee.
$5. That's a good deal, by the way.
That's the bank.
Where's that gonna go?
The book.
Yeah, so check printing fee.
Note interest income. That's that the book. That's the book.
Yep. So
Edit
so we got the they collected the note and they collected $20.
interest.
So for the most part, when you're doing this, you should generally only have these two in the bank side: deposit and transit, outstanding checks. If you look in the book, a lot of times they'll have like a bunch of errors and stuff. You hardly ever see those. Okay, so time for the calculator. The last time you'll see calculator tab. It's a happy but sad time. $2,015. These two sides should equal, and they do. I made it worse. Oh, I know. So that's it. You get when I have one of those in the test too. So you have, I think there's 4 multiple choice questions and then 2 questions similar to these.
For the final?
Yep, that's it.
That's great.
It is great. And
It's been great. You was a great professor. I really enjoyed
thank you.
it.
Thank you.
I
I
thought
enjoyed
class.
your
I
class.
really, really did.
I
mean,
really did enjoy this class.
I did. I didn't even
Oh, good.
suspect this.
Wait, so all this work we've been doing is just to bring us to this point?
Yes, yes. It's been good.
I didn't say it was going to be worthwhile. I never said
I mean,
that.
no, I'm not saying it like that. I'm just saying we did a lot of work and then, I mean, I guess it was good because now we
It was
understand
good,
it.
yes.
But it was a lot of work to bring us to this point. Like,
I like his.
Yeah, I agree.
Yeah.
Rosita.
I like the interaction. I like the way he teach.
Oh, good.
It's
Thank you. Yeah,
awesome.
yeah. Well, and hopefully too.
We need you throughout the whole county.
I know, right?
Yes.
Well, but hopefully, if there's one thing you've also learned, though, is that you can do this stuff. I mean, it's
Right.
it's daunting,
yeah,
you know,
that was
maybe
my
at
point
first,
exactly.
but you know, you belong here. You know, you belong in college doing this. So. Okay. Yeah. So I will send out the test. The last test. Let me pull that up. So I will send that out. Within the next half hour or so, I'll send it out, and it'll be due next Friday. Everything will be due next Friday, but
Right.
you know, but the including this test. And if you have anything else, make sure you turn everything in that you can.
Yeah.
And especially the exams. So if you're trying to decide whether you should do this big long 10-page handout or an exam, do the exam because it's going to count more.
Okay.
So, all right. Well, great having you guys.
Thank you.